As economists around the world cut their forecasts for economic growth through 2023, it may be increasingly difficult for investors to find reliable growth stocks to buy. Despite the Fed's best efforts, inflation remains well above the central bank's 2% target. Value stocks have outperformed growth stocks over the past year amid heightened concerns about rising interest rates and the possibility of a U.S. recession. The recent weakness could prove to be a long-term buying opportunity in top growth stocks, but stock picking is key. Here are 8 of CFRA Research's best growing stocks for 2023. Number 1, Apple. Apple makes iPhones and other high-end consumer electronics devices. It's also one of the most financially sound blue-chip companies in the world, with 2021 net income of $94.6 billion. Apple may not be the high-growth stock it once was, but the company still posted 8.1% year-over-year revenue growth in its most recent quarter. Analyst Angelo Zeno likes Apple's high customer retention rate, large global ecosystem and growing addressable market. Zeno also likes the company's aggressive buybacks and management team. CFRA has a buy rating and $165 price target on Apple stock, which closed at $142.16 on December 9. Number 2, Microsoft Corporation. Microsoft is the largest software company in the world, known for Windows, Office, and Azure cloud services. Even with a market cap approaching $2 trillion, Microsoft still has impressive growth numbers. In the first fiscal quarter, Microsoft's overall revenue increased by 11%, of which intelligent cloud revenue increased by 20%. Analyst John Freeman said Microsoft's transition to a cloud-based business model has been a huge success, with revenue from its cloud business now accounting for about 2/3 of the company's total revenue. CFRA has a strong buy rating and a $330 price target on Microsoft stock, which closed at $245.42 on December 9. Number 3, Amazon. E-commerce and cloud services giant Amazon has been one of the best-performing growth stocks of all time. Unfortunately, with revenue growth slowing to 14.7% in the third quarter, Amazon shares are down 46.6% in 2022 as of December 9. Analyst Arun Sundaram said investors may be disappointed by Amazon's earnings growth next year, but the company's investments in productivity, cost management, and high-margin businesses such as cloud services and advertising have made Amazon potential for a secular turnaround in earnings growth. Sundaram expects Amazon's revenue growth to slow to 8% in 2023. CFRA has a buy rating on Amazon stock with a $152 price target. Number 4, Tesla. Tesla is the leading electric car maker in the United States. Tesla posted a 55.9% increase in third-quarter revenue. However, as of December 9, Tesla's stock has fallen 49.2% this year, making it the worst-performing stock on the list. Some of the selling pressure came from Tesla's CEO Elon Musk, who sold more than $19 billion worth of Tesla stock in 2022. Analyst Garrett Nelson said Tesla's new factories in Texas and Germany allow the company to continue growing in 2023 and beyond. CFRA has a strong buy rating on Tesla stock and a $300 price target. Number 5, Alphabet. Alphabet is one of the world's largest online search and advertising companies and the parent company of Google and YouTube. In the third quarter, Alphabet reported a 6.1% increase in revenue, led by a 38% increase in cloud revenue. Alphabet's valuation is attractive compared with other big tech stocks, Zeno said. In fact, Alphabet 18 has the lowest forward PE ratio on this list. Alphabet has huge cash flow potential and can sustain annual revenue growth of 7% to 11% over the long term. Number 6, Visa. Visa is the world's leading credit card company with the world's largest electronic payment network. Analyst David Holt said Visa's diversification across different payment categories has helped the company deliver sustainable revenue and earnings growth even in an economic downturn. Visa reported an 18.7% increase in revenue last quarter. According to Holt, Visa generates a high return on investment and has additional growth potential in related industries such as analytics, security, and cryptocurrency. Holt forecasts that Visa's revenue will grow 8.5% in fiscal 2023. CFRA gives Visa shares a buy rating and a $255 price target. Number 7, NVIDIA Corporation. High-end semiconductor maker NVIDIA has written one of the most compelling growth stories in the entire stock market over the past 15 years. Unfortunately, NVIDIA stock has fallen sharply from its all-time highs, and its growth has dried up. Last quarter, NVIDIA's net income fell 72.4% on a 16.5% drop in revenue. Zeno estimates that NVIDIA's revenue will increase by 13% in fiscal year 2024. The cloud, artificial intelligence, and metaverse markets, all considered to be high-growth industries, depend on the company's materials. CFRA analyst Mark Miller rates NVIDIA at a buy price of $200 and has a rating of neutral with $170.01 in share value on December 9. Number 8, the Home Depot Corporation, also known as HD. Home Depot is the largest home improvement business in North America. The business grew tremendously during the 2020 and 2021 flu pandemic due to increased mortgage rates and more projects completed. According to Kenneth Leon, the business will continue to thrive due to families' decision to stay in their homes. This pushed demand for DIY projects, which the retailer sold a lot of in 2022. Home Depot reported increased revenue for each of its departments in the last quarter. CFRA analyst firm has a buy rating for the stock and a $350 price target. Here we are at the end of the video. That was our list of the 8 best stocks to invest in for 2023. But before investing, consider that the value of your investment may rise or fall and your capital is at risk. Before investing, your individual circumstances should be assessed. Consider taking independent financial advice. Thank you for staying here till the end. I hope you found our topic interesting and helpful. Don't forget to leave us a like and a comment, and subscribe to the channel.